Good morning, everyone. Welcome to the European crossover webinar. And we just got Eurozone services PMI, and that came in at 12. Also, German services PMI came in at 16.2 versus expected 16. French at 11. Well, 10.2 for the services, and Italian at 10.8. We do get UK data at the bottom of the hour, and then at the top of this next hour, we do get retail sales. Coming into the States, ADP, and that'll be it. We did see a pretty good sell-off in equities, and then they have bounced back. Actually, they made it up here 28.85. They're kind of dead in the water here. 28.74. I hope everybody had an opportunity to take advantage of that dip, which followed through in Asia. I had shared as we continue to press even further that we had some level support at 28.54. Followed by volume level support at 28.46. And I think you can see here the low was just below that right here. But that was volume support on the book map. We're still trading well above the, this is actually on a 3-day VWAP, but I usually have that updated for a 2-day VWAP, but you can see we've held up here, which allowed the market to push back up. And I was able to get my final cover. I think it was I put it at 28.47, or I think it was a 47.25. Anyway, I took a nap and woke up and it had already been taken out. And I haven't gone back in. We did get a little bit of a bounce back in Asia trade. I think the market was stuck around. Let me see here. Yeah, here we go. We got here at 28.63, and the market dipped back, and it was just stuck looking right here around 28.60. Of course, we finally got that big jump here. Much later on, I was already asleep. Then went another jump, and we're kind of sitting here at 28.67. I haven't done any work on this because I thought that the market was still going to have a bias, and we'll have to see how this shifts. But you can see they've actually made a pretty good little bounce back up in here, and even where they are now is still holding up relatively well. Here it is at 28.78 here on the 2-hour. Let's see here. We'll see how we go. You can see here we dipped and we're, at least on the 30-minute, we're back on the buy mode. Taking a look at crude oil. You can see here we got above, doggone it. You can see here we got above the 50% and that 61%. We actually got above, we paused, we paired back, got above, and now we're kind of back below it. And I'm looking for a bit of a pause here. We were able to push up higher to make it just above this 25.37. We held above it, and here we are sliding back. So we've had a pretty good run here in crude oil. So a pause is certainly warranted. With that, we'll just go and move into FX. And let me get the news. So Australian New Zealand dollars becalmed. Data reflects pre-pandemic times. The Aussie and New Zealand dollars were left to drift on Wednesday as investors blew hot and cold on the global outlook, while the local data was solid, but merely presaged the coming of the coronavirus lockdown. The Aussie was idling at 64.35. Kiwi was listless at 60.52. Normally important economic data had scant impact as they covered the first quarter of the first year of the year and thus missed much of the damage by the social distancing and business closures. Australian retail sales did jump by a record 8.5% in March as consumers stockpiled food and basic staples, but much of the gain turned out to be from higher prices, limiting the boost economic growth. It will likely also be offset by a collapse in spending on services, new car sales, and rundown in retail stocks. Expects economic output shrank by 0.3 in the first quarter, ahead of a sharp 7% fall in Q2. The Australian government is talking of reopening the economy in stages over the next 3 months, which should lead to improvement in the second half of the year. Bond futures were a little lower for the day in recent ranges. Over in New Zealand, the unemployment rate edged up to a below forecast of 4.2% in the first quarter. Beginning this data largely preceded the coronavirus lockdown. Looking ahead, labor market will deteriorate. It already has, said Kiwi Bank senior economist Jeremy Couchman. The unemployment rate is set to soar, and we think that will peak around 9.5 to 10.5%. He noted the government would deliver its budget next week to include more stimulus. And in general FX, the yen scaled a 3-year high against the euro and the 7-week peak on the dollar on Wednesday after a court decision challenging German participation in Europe's stimulus program and worries about a bumpy global recovery spooked investors. Germany's highest court on Tuesday gave the European Central Bank 3 months to justify purchases under its bond buying program. or lose Bundesbank as a participant in a scheme aimed at cushioning the economic blow. The news, the euro sent to a one-week low of 8.26, where it stayed, and a three-year trough of 15.09 in the euro yen. The yen is also edged up hard against the dollar, pushing the resistance to a 7-week high of 6.22. The volumes were light. Other majors were mostly in stasis as dire economic indicators and concerns about U.S.-China tensions held recovery's optimism in check. The yen has been the pick of the major currencies since the crisis started, and that should continue to get jukes. The level of yields is the biggest driver of yen strength, and they'd have to go a fair bit globally to make the yen weaken. The yen is up 2% on the dollar, nearly 6% on the euro for the year so far. It's hit a 3-week high against the Korean won. The Aussie sat at 64.32 and the Kiwi at 60.52. The German court decision is unlikely to completely derail the European stimulus program, since the European Central Bank is broadly expected to be able to justify its bond purchases. But the resulting uncertainty is only the latest strain. The pandemic's heavier toll on debt-laden Italy and Spain compared with Germany has revived tensions between wealthy northern and poor southern European members. This will be the second time we've been in a major crisis, and the ECB is under pressure, St. Louis Federal Reserve President James Bullard said on Tuesday. This very much is a stress test for the euro and the European project to be able to react to this crisis in an effective way. Elsewhere, Trump pressed about China origins of the outbreak. Blah blah, nothing there. So let's go on and move on to the analysis. So the euro furthered its slide on Tuesday in the aftermath of the German court decision. Support will be 808 with resistance at 872. A daily close below 820 will open a target for 726 with initial support at 776. If we get that daily close, that'll be further. But for today, support is going to be, and we're just about there. Yeah, it looks like we did make it to 808. So support is 808. With resistance at 872. And let's go move on to the cable. Cable closed slightly weaker, albeit in a tight range. A potential move to 2330 remains and will be support over the next 2 days. Resistance will be 2525. So we're lowering this down to 2330. $23.30. And let's go move on to the Aussie dollar. The Aussie had a small bounce back rally following a mini hammer on Monday. You see the mini hammer, and then a small bounce back rally. Resistance remained 64.87 with support at 63.52. 64.87, 63.52, so no changes there. Mini hammer, a little bounce back, but not a whole lot. But resistance is keeping this thing in check right there, 647. The bounce back didn't quite make it to see the bounce back rally made it to 64.76, and we had 64.87 yesterday, and that's going to remain the same. The Kiwi posted the candle pattern called a spinning top. You can see right here, and it's not necessarily at a top, but you can see here, right there, yesterday, which would suggest a loss of momentum. The risk remains for lower. Resistance is going to be 61.05 with support at 59.88. So 59.88 holds. The only difference is that the resistance is lower to 61.05. Dollar CAD bias chart resistance will remain, which is 41.41 with support at 39.91. There was really no change here. So we're still trading in a relatively tight range. No real changes here. Only difference is this drops to 39.91. Once again, some of these majors aren't even moving barely. Look at the dollar peso. The dollar peso held bias chart support at 23.75 on Tuesday, then closing around 24. Resistance on Wednesday will be 24.31 with support at 23.48. But you can see we're trading in a very tight range. We haven't even taken out the high or the low on either side. Now let's go move on to the dollar yen. Now the dollar yen continues to weaken. Support over the next few days will be 584. So we're actually allowing this to even drop much further, thinking, hey, there's a potential for this to move lower. With resistance at 660. Really tightened up that thing. Holy smokes. So 660. We're not giving it much room to the upside. High today so far has been 658. And we're dropping this all the way down to a potential move down, which is to 584. Doesn't mean it's going to be necessarily today, but over the next couple of days, potentially move this down to 584. Let's move into the cash dollar index. And we're flying through this because most of these majors aren't even moving. It's just dead in the water. Graveyard trading, with the exception of the euro. And of course, dollar index, because they trade inverse to each other. The dollar index furthered its rally. Resistance on Wednesday will be par 05 with support at 99.48. So we've already quickly gone through the majors. We're going to move into the cross rates. Look at the Kiwi yen. Look at that. Still, we're just trading in very, very tight range. I mean, some of these markets are just flat out dead as a doornail. Look at this stuff. Pitiful. We've traded in a 45 pip trading range, and yesterday was a 40 pip trading range. So the only difference is right down there would be the support. It's going to be 64.08. And you can see this kind of cross right there. We'll just go to that high, right there, that high, which is 64.80. And going to the euro yen. Well, it certainly has continued to weaken with what's gone on with the German court ruling. Right there, we're seeing some 1467. This low here is 1479. I like the 1467. Down last for a little bit of a dip below that. Boy, is it taking a beating. Right there's going to be resistance. 1512. You have to give a little bit more room to go to the body touches, which isn't much. 1516. Euro continue to weaken here. That's going to be support. You see these two lows right there? We'll go with 1676, which we're just about there anyway. We'll see if it can make a stand there for 1676. No pause. 67, 67. On the squawk, they're saying K will slip below 124. Remember, we're looking for potential move down to 2330. Resistance. Ooh, euro drop below 108. So we are seeing that pressure. Resistance will be right there, 68.56. Yeah, let's go into Euro Kiwi. Right there for support, which is going to be 78.09. Equities continue to weaken a little bit here. Seeing NASDAQ pulling lower, which is dragging SPOOs down to 28.73. We have lost that level of that volume level I had there, 28.76 and a quarter. And we'll take a look at resistance. Which is going to be right there, 79.36, 79.36 for resistance. And let's go move into the ASEAN. Well, looks like, I think you said KO made, which is 23.74. We're looking for 23.30. There we go. We're looking for 23.30. That's our take, 23.30. We actually had this analysis since the weekend. We're looking for a potential move. We guess with the analysis, we said potentially could get down there, and certainly we've done that here. We're on our way to 23.30. As I mentioned, I didn't think it was get there today, but I thought in the next day or two it can. ASEAN, same here. Look, we're just some of these markets are just dead. That's going to be support right there. This body right there, 68.08. And the rally up, you see this body touch right there? It's going to be right there. It's going to be 68.83 for resistance. UK construction data, 8 spot 2. below the 21.7 they were expecting. So some further downside here. Not a whole lot, but the push is still a little bit lower here in cable. Move back into the RCN, which we've already done. Let's go and move into the guppy. Might as well just move right into the intraday because certainly making this move down here to this key level, which is going to be 31.35. And let's take a look at resistance. Yen continues to strengthen. It's going to be right there, 32.15. See if we get some kind of a bounce back, but that would be resistance 32.15. Support is just going to be right there, 92.15. Once again, just going with the levels on this stuff. 92.15. And resistance, which is the same thing, which is going where the volume is, right there. 93.24.5. Let's call it 93.25. Well, look at Euro. It's already down to 7.93. Below our Bosch chart support. But we said if we do get a close below 820, that's really going to open this downside. With that, we'll go in and take a look at equities and see where they stand. Okay. So you can see here, we're back. We're holding above 2-day VWAP. So certainly that potential still for another pushback higher. Let's go 30-minute. So we really pushed them much higher than I would have thought yesterday. Fortunately, we should see that dip, which I thought we'd see some support, as I mentioned, around that 28.46-ish area here. I mean, for the next layer down. I didn't know we'd think we'd push too much further below that. And we didn't. I think, like I said, we got down to, what, 28.42? 28.42 or 28.43. So they made it right to the 61%. I wanted to short there, or I wanted to add on, but I thought better to be a little bit cautious. And actually, unless Richard Clarita, who came out, well, I think it was CNBC, and made those comments, he's the one that really knocked it for a loop. Had he not made those comments, we'd still be up around there, if not a little bit higher. My concern was that we may have made it to 2905. So I think we're still open to push a bit higher. I don't think we're going to turn around and come off, although I think the rally back, which has not been bad. If you look here, you don't like to go with the body touches. So there you go. That nailed it right there. If you look at this body touch. Now, I wasn't up, but I would have liked to have taken that short there. Right there. You see that coming across? So we'll go. That was a pretty good rebound here. That was a pretty good rebound. And you can see here on a 30-minute, ended up with the gravestone doji, and we're seeing a pullback. The key now is if we get a close above this level, that's problematic. So let me remove this one here. If you're bearish, I don't have any position yet. There. So to me right now, 2881 is big. Well, the bigger one is right up in here, but 2881, if we get a close, and we're already in a buy mode. You see there? We're already in a buy mode. I mean, we have been. So they're buying this pullback. If we get above 2881, that opens the door for them to go right back up and challenge, at least from a technical standpoint. And as I mentioned, we're above 2-day VWAP here. So that keeps the momentum. Now they're pulling back again. They got to 2878, another dip back. But it's quiet trading right now. Like I said, for me, I may just even wait till. If I got this, I would have gladly have taken that. But and still they're holding it up pretty well. I may just want to wait till the cash open because that's where all the action is taking place right now, is during the U.S. Open. There have been times where a lot of action was taking place during the European Open. Not European Open, I mean European trading. It's been a little while since then, but now lately everything's shifted back where the big moves, the strength of the move is taking place during the U.S. session. But if you can get a move, you can catch a move like this, which is essentially 40 handles off the low. Heck yeah. I wasn't up at that time. Probably would have been a good idea if I had got up. After the move that we saw at 2840, but I kind of thought when we bounced back, I thought, you see how we bounced up in here? I thought we were just going to sit around here and maybe we'd get up to here. But still, I felt anything up to 2870 still wasn't anything conclusive. But now we've rallied up in here And that was a pretty good move. But now the challenge is this 28.81. You can see that right there. If you look at the 2-hour chart, then you'll see what my concern was, is that potentially we could have jumped up to 29.05. And that was going to be a concern. Although I really wanted to add some more at 28.90. I mean, I'm flat now, but I wanted to add some more, but I thought, no, better, to manage the risk, because if we jump up to 29.05, best that I just add at that point if I still feel confident. And primarily I just scalp, but once again you have to manage the risk levels. And I thought that because we had closed on Monday above 2-day VWAP, which at the time was 28.21, I knew that this move could move a bit higher. My target on the upside really was, or I thought the other side of the range was around 28.60. Obviously they pushed much higher. But I still felt comfortable with the short. And since I was scalping and had taken advantage of the moves during the European session, I had extra gains in my pocket to work with, and it ended up working out okay. But I thought it wasn't necessarily prudent. How strong that the stocks, remember, they continued to make highs. Apple, Microsoft, Google were on their highs and even pressing even higher. So that, we may even move up to 29.05. Best I just wait, and then if it makes it up there, I can add if I still feel comfortable with my position. But anyway, Richard Clarita made those comments that knocked everything down. Actually, you can see here, we just came down here to the bottom of the zone. So we'll see how the rest of the day plays out. But thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room later.